NIO stock is showing early strength on Tuesday, trading up about 8 cents in pre-market action, and if you're following this story closely, that small bounce may actually matter. Yesterday's sharp sell-off knocked shares down to around $4.60, but today's move suggests something else might be brewing, the potential for a reversal. Let's dig into what's behind the early strength, why it matters, and whether Monday was the beginning of a bottom, or just a pause. To start off, price action matters. After dropping nearly 8% yesterday, NIO is showing a modest rebound before the bell. That's a technical footnote but also a hint, possibly buyers testing demand at lower levels. It's often in these moments that shifts in sentiment reveal themselves. If buyers return to keep price inside the $4.60 to $4.70 zone, it may signal a turning point. Weakness on continuation would reinforce downside risk, but today's pre-market strength sets up a real debate. What's driving this bounce? There are a few likely explanations. First, broader sentiment across Chinese EV stocks showed signs of stabilizing overnight. China's state media released cautious optimism around auto sales stabilization in August, and while Tesla and BYD have broader channels, NIO is tied to that upward momentum. If the sector is starting to re-rate, NIO may be picking up some of that flow. Second, and perhaps more central, is the belief that yesterday's delivery miss may have been a month-end anomaly. July deliveries came in at 21,017 units, down from June but up year-over-year. Importantly, Onvo L60 deliveries began only late in the month, meaning their contribution likely shows up in August figures. Investors looking beyond headline numbers believe the product cycle is ramping, not stalling. Technically, price is flirting with a potential reversal zone. We've broken down through short-term support at $4.80, but there's a chance the market is constructing a base between $4.60 and $4.50. If that range holds, especially with rising volume, there may be enough steam left to retest higher levels, like $4.90 or $5.10 resistance. One wedge in NIO's favor is the persistent short interest. Roughly 9 to 10% of the float remains short, based on the latest data. That elevated figure means even small positive catalysts, like better delivery news, swap station usage stats, or analyst upgrades, could lead to short covering. That dynamic may underpin today's early strength. Another reason to stay optimistic: NIO's pivot into mass market offerings. Onvo and Firefly vehicles already account for over 40% of deliveries in June. If that trend continues or accelerates, it validates the strategy and creates scale, something investors have been watching for. The market rarely rewards potential, it rewards execution. With deliveries ramping, NIO may be starting to deliver both. Then there's the battery swap infrastructure advantage. This is one of the few areas where NIO competes on a level no other EV company can match yet. With over 3,100 swap stations deployed and around 20% now break-even or profitable, NIO is building real utility. If the market begins to see these stations not just as customer perks, but revenue drivers, that could significantly increase investor conviction. From a macro angle, the EV space in China is evolving rapidly. Regulators have dramatically reduced margin for error, and pricing pressure is real across the industry, especially from BYD and low-cost competitors. But NIO's strategy appears to lean into this environment: brand value, infrastructure loyalty, and profit discipline. If they can carve out consistent volume, especially in the mid-tier segment, they may emerge stronger even in a crowded and consolidating ecosystem. So where should traders and investors focus today? A few key items. Pre-market volume and price behavior. Sustained strength above $4.65 into the open would be encouraging. A quick reversion below that level suggests volatile repositioning rather than conviction. Sector news flow. Headlines about EV sales improvements or policy support may lift expectations for August deliveries. Deliveries updates or hints from Onvo dealers or fans posting early impressions. These might not move the price immediately, but they accumulate value as sentiment signals. Swap station performance updates. Even regional updates on utilization or profitability could validate the longer-term thesis. Institutional commentary or analyst movement. If early buyers surface, it often shows up through options flow or mentions by equity researchers referencing NIO in broader EV themes. Take a step back, and the bigger picture still aligns. After a sharp drop, NIO is testing whether the fundamentals remain solid enough to drive the next leg. Delivery momentum, margin expansion goals, cost discipline, infrastructure differentiation, these aren't gone. What's changed is short-term sentiment. But sentiment can quickly pivot. If the stock holds the $4.60 base and reclaims resistance levels, particularly in the face of positive news or sector strength, it sets up a compelling path for a bounce. On the other hand, if volume appears weak and price collapses further, the downside could target $4.40 to $4.30, where longer-term support clustered earlier in the summer. But even then, long-term bulls have reasons to remain engaged. The company is delivering real products to real customers, expanding its user base, and generating infrastructure returns that build over time. That's a story that doesn't snap back overnight. It may pause, but it doesn't end. At its core, today feels like the market testing whether the narrative still holds. A solid move above $4.65 or $4.70 on strength may confirm resilience. A breakdown could test long-term holders' convictions. But either way, this video is just getting started. We'll be watching volume, sector commentary, and any new delivery clues closely. So yes, NIO had a rough day, but rough patches don't define the full story. They test resolve. And right now, the ingredients are still aligned for that bigger narrative: infrastructure, scalable product, improving execution. And with elevated short interest and recovering sentiment, the return path may be sharper to the upside. If you're watching this move, stay engaged. Let's see whether this is a consolidation stage or the beginning of a deeper correction. Because at $4.60, someone is asking the right question: is today the end of a rally or the start of a new uptrend? Thanks for tuning in. If today's update gave you insight, hit like and subscribe for more EV stock perspectives. I'll be back with the latest as soon as the market settles.